welcome to the Crypto Week in Review. I hope you've all had a wonderful week. Let's get right into it. Pretty interesting week. We've got some news on the stablecoin front. We've had some long-awaited NFT Marketplace finally hit the scene this week, in addition to some new pretty hot NFT collections. Of course, there's also been yet another prerequisite hack in the crypto community that happened last weekend, and in addition to some new sanctions that the Treasury has placed on the Russians, as is probably no surprise to anybody. So, with a lot to unpack, why don't we start as usual as we do with Christian, to kind of take us through the events of the week. Christian, what's been happening?
Yeah, sure. Okay, I guess I'll start with the algorithmic stablecoin stuff, because I think this is probably going to be something that we are going to see be playing out over the course of several weeks, and it's probably going to be one of these narratives and trends that kind of takes off in Q2. So we spent a lot of time talking about Terra in recent months. Just having seen that Luna just kept on flying, it was hitting all-time highs while everything else was down, and a big part of that was down to Do Kwon and them kind of setting up this Luna Foundation Guard with a plan to set up a reserve fund, sort of stabilize Luna in the event of a kind of DPEG event with the UST. Similar to what happened like last May, it kind of took a slight hit when the market really plummeted. Obviously they started buying up all this Bitcoin, committed to, I think it's ultimately 10 billion, but they're going to do like an initial $3 billion. Even now buying Avalanche and all this other stuff. And off the back of this, obviously Terra and Do Kwon as well at the center of it, the kind of cult figure behind it, was getting a lot of attention over the course of the first quarter of the year. We ran quite a lot of stories on that, including one sort of joke story that ended up getting picked up by his legal team. But anyway, we won't go too deep into that. But as a result of all this and the idea of like stablecoins and having an algorithmic stablecoin system, like a dual token mechanism, and offering pretty high yields, other projects have sort of taken notice of this, and it seems like this is going to potentially kick off a new trend in the layer 1 and broader crypto ecosystem. So it was initially rumored that Near would be doing this. So Near is like a sharded layer 1 chain, got a fair amount of hype this year off the back of the kind of alt layer 1 boom we saw in late 2021, where Solana, Terra and Avalanche flew, and people were saying, oh, maybe Near will be next. But then you had others saying, oh, maybe this is just VCs looking for exit liquidity and they want to trick us into buying it, and then they'll kind of dump their bags on us. So there was a lot of speculation around Near, and a couple of weeks ago it kind of emerged that they might have this stablecoin plan. And just this week we've seen that USN, this proposed stablecoin, has actually gone live on testnet. So this doesn't seem to be just a rumor now, this is actually going to happen. And this is like looks like Near is going to be taking the path that Terra has taken. They apparently want to offer 20% yield to rival the 20% that lunatics can earn in Anchor Protocol, which is the Terra-based like lending platform that's by far the most used project in the Terra ecosystem. So you're potentially going to have this kind of rush for the yield, right? It'd be like the just an extension of the Ponzi games, as it were, that we see in DeFi. So, we had DeFi summer and everyone was trading food tokens and kind of dumping on each other, and DeFi protocols offering like lucrative incentives, so everyone jumps over. And then, they went over to Polygon to get all the rewards there and all this kind of stuff. We're probably going to see this as well. So there's probably going to be a lot of opportunity to like capture yields when like these stable coins come out. And it's not only Near that's doing this. So Justin Sun, someone who will be pretty well known to anyone who's been following the space for a while, famously launched a blockchain that some argued was a sort of clone of Ethereum that had some similarities in its white paper. So yeah, Tron is pretty similar to Ethereum in some respects, and it's now kind of adopting a similar mechanism as well with a stablecoin called USDD. And yeah, I think it wants to come up with a pool with like UST as well. Justin Sun has put out some stuff saying happy to collaborate with UST, and even Do Kwon was tweeting on it as well. And yeah, it looks like they're sort of going down a similar path with this algorithmic stablecoin model. It's worth mentioning as well with this. Previously, so UST is like the biggest decentralized. I say decentralized, no one can see me, but I'm kind of doing like inverted commas as if to say not necessarily entirely decentralized, but UST is the biggest decentralized stablecoin, right? So it overtook DAI, which was previously like the darling of Ethereum in the stablecoin world. And Terra has kind of established this plan. Do Kwon has been pretty open and he said like pretty outrageous tweets like, by my hand DAI will die, meaning like he wants to kill DAI. And he's come up with this pretty complex plan that's going to involve basically a 4-pool, it's called, on Curve Finance, the most used decentralized exchange. And it's going to kind of have multiple stable coins in it, but exclude DAI in a bid to starve DAI of liquidity, because it currently DAI is in 3-pool, which is like a pretty important pool in Curve. And yeah, Do Kwon's plan is basically to launch this new 4-pool, and that's going to include 4 stable coins but not DAI. And yeah, Stefan did a very good detailed article on this that you should check out if you're interested in learning more. But basically, as part of this whole narrative as well, is worth paying attention to how Do Kwon is essentially making it his mission to really hurt DAI in the long run. And I think Maker came up with a new proposal this week as well to kind of combat that. But yeah, we'll see how they fare. So yeah, lots happening in the layer 1 space, and this whole stablecoin trend I think is probably going to be lasting for a while, and we'll see how that plays out. Beyond this, yeah, Jake mentioned ongoing sanctions. So as we know, yeah, the war is still ongoing, and yeah, sanctions are definitely continuing as well. As part of this, we saw this week US Treasury and OFAC have introduced sanctions against BitRiver, which is a crypto mining company based across Russia and Switzerland. Now they had issued sanctions to like various entities, targeted individuals based in Russia, and obviously we saw various politicians coming out and saying, oh yeah, but we don't want Russia to use crypto to evade sanctions. We don't want the oligarchs using crypto kind of as a weaponized attack against the industry, some would argue. But yeah, now they have actually sanctioned a specific mining company. So this is like a new thing in this whole sanctioning world, I guess, that we're seeing play out over recent months. And then we also had this week Binance in line with, I mean, it's not really a surprise, it's not much of a news story, but it is a development. In line with EU restrictions, has limited Russian users to transactions of 10,000 euros. 10,000 euros or less. So yeah, this is something that's like the EU implemented, and kind of Binance has followed through with it. We'll probably see other exchanges go a similar way. And then CC put something up today that was basically saying, the way I read it, he said, we don't really agree with this, but we have to do it, kind of thing. I'll just put it up here because I was reading it earlier. I thought it was quite interesting how he discussed it. Yeah, so he said, we believe a crypto exchange should not have power to unilaterally freeze an entire nation's user accounts. It must follow all sanction roles, old and new. EU has taken a historic aggressive action and placed a €10,000 cap on Russian residents' user wallets. And Binance has given its word to the community that it will implement any sanctions required. And then he finished up with a note saying world leaders need to do what's necessary to put an end to the conflict. I can see where he's coming from. Just kind of towing the line. And we know that Binance had a lot of trouble with regulators last year, so no surprise that they're sort of following through with this. They are the biggest exchange in the world after all. Cool. Beyond that, some stuff that happened last weekend, but has developed over the last few days. One of them Jacob mentioned, which is Beanstalk, the DeFi protocol that a lot of people seem to be a fan of. Pretty innovative mechanism it had, credit-based stablecoin project. Yeah, that was hacked last week to the tune of around $76 million, although the protocol ended up losing a lot more. Quite interesting, by the way. If you guys haven't noticed, hacks tend to happen on weekends, and it just happens a lot because they seem to assume that that's when no one's going to notice, right? And you'll see this happen. It's often on Saturdays when sort of no one is paying attention. Saw it with OpenSea, various others that have happened this year. If you're ever using these projects on weekends, that's often the time that these strikes occur. But this one, it's tune of 76 million, and the Beanstalk team was pretty open after, saying, I think I read a Discord message where one of the team members was basically saying, we don't have funds to reimburse users, and just pretty openly saying that it could basically kill the project. Haven't been too closely following what they've come out with since, because they took a while to come up with an official statement. But Bean really took a bad hit and sort of essentially lost its peg. So it's meant to follow the dollar, and it ended up going down to 20 cents. I imagine it's recovered somewhat, but bad news for Beanstalk fans. Also, something that launched last weekend, and this was probably the thing I was paying closest attention to, and as were a lot of NFT fans, something we discussed earlier today on our call, and we were kind of joking that we should set up a Cope Club around this, is the Moonbirds NFT launch. So this was a highly anticipated project, kind of labelled as a PFP project, like an avatar project, but really these NFTs, which owl characters, 10,000 owls, will give utility to the whole Proof ecosystem. And Proof had a very successful launch earlier this year with a pretty big drop that saw some big names take part with various artworks. So this thing was really anticipated. They had a sign up a couple of weeks ago, and to do that you had to verify your wallet, your Twitter, Discord, and show that you had 2.5 ETH to pay for one of these things. And then they revealed last weekend who would be eligible. It turned out you had a roughly 1 in 4 chance of getting a place if you signed up. I was one who signed up. Other members of the team did as well. Unfortunately, none of us got one of these things, but they ended up minting out at 2.5 ETH. So the team took around $66 million in a couple of hours. 2.5 ETH, if you could pay that now, you would rush to, right? Because these things have soared this week. Briefly hit as high as 40 ETH last night. So that's over $100,000. Is around that price now, 35 ETH or so. And this collection has gone on to become just the highest traded in its first week. I think in any NFT has hit over 100,000 ETH, which is staggering in 6 days. Other collections like Broad Ape Yacht Club, that they took a long time to hit that volume, and 100,000 ETH is more than some of the so-called blue chips like Cool Cats and others have traded in almost a year, or in a much longer time frame. So this collection has really done extremely well, lots of hype behind it, and yeah, the people who minted and are still holding are having a very good week there. Also on the NFT tip, we saw Coinbase go live finally with its marketplace this week. Can it topple OpenSea? I don't know, but it's taking a very different approach in that it's kind of gearing towards social. So you can add friends and like comment on their NFTs, which is quite a risky move really, because probably going to see just people like issuing FUD on each other's NFTs and stuff like this. I mean, we'll see how it goes. But yeah, Coinbase has launched with this. I think initially you can pay in ETH, but they are going to add a MasterCard support in the future. From what I've seen, the volume is pretty low, and they are definitely going to have an uphill battle competing with the giant that is OpenSea. I think people are used to trading on OpenSea now, even if they end up giving away their Bored Ape or getting rinsed on gas fees. So yeah, we'll see how Coinbase does, but it's another competitor for OpenSea, one of many. Can it topple it? I don't know, but it's here, and I imagine they're going to be marketing it hard over the coming months. So we'll see how that goes. And yeah, that kind of rounds up the week.
Thanks, Christian. There's a lot of places we could start. I think we might as well start where we are and work our way back. So these Moonbirds NFTs, I admit to being a little surprised by their success, and maybe not surprised. I don't know. I've developed over the last few years this weird feeling of being able to be simultaneously astounded but not surprised at all. And I feel like that with this sort of meteoric rise of these digital owls, I'm sort of experiencing that feeling again. What you mentioned that there's utility involved. I wonder if we could just go into a little more detail on what is it about these particular NFTs that, they were so hotly anticipated. Why were they? What differentiated them from all the other, avatar profile projects? Tim, you're into NFTs. I'd like to get your view on this. What made Moonbird so special?
I'll try my best here. Yeah. So it all starts, like Christian said, with Proof Collective. Mm-hmm. They issued these Proof Collective passes, and there's only 2,000 of them. No, sorry, 1,000. Only 1,000 of them. So not a very large supply. And, it's mostly based on speculation at this point. Like, no one really knew where they were going to go with it. Like, it was a very well-established team. They have a very good presence, millions of followers on Twitter. They looked like they were doing everything right. And then I think the big watershed moment for it came when they did their Grails collection, which was basically they had contacted some of the most prolific artists in the space. We're talking Tyler Hobbs, of Fidenzas. We had Lava Labs and Autoglyphs. And they got each of these creators, there's loads more as well that I haven't named, but they got each one to create a new sort of special piece of art. And anyone who owned a Proof Collective pass could choose one of the pieces and mint it. But the caveat was they didn't know which piece was by which artist until after the mint had closed, and then it was a big reveal. And a lot of these pieces, after the reveal, people are like, oh, it was by that artist, and they shot up in value. There was a lot of hype around it, and people who had bought or minted the Proof Collective passes made a lot of money doing that. And so that, I think, got the ball rolling. People were like, wow, if they're going to keep doing events like this, if I hold this pass, it'll pay for itself in a few months from all of these exclusive NFT drops and mints that I will be allowed to access. So now we've got that covered, onto the Moonbirds NFTs. So it's by the same group, Proof, and they're calling them the sort of Proof Collective NFT, the PFPs, Profile Picture Collection. So there's a much bigger supply of 10,000 as opposed to the 1,000 passes. And they haven't said anything about what they're going to do apart from just sort of vague things like, yeah, it'll give utility, you'll get exclusive things, airdrops, mints, that kind of deal. And to sort of improve on what they've done with the passes, with the birds, the Moonbirds, you have to sort of stake them in their nesting feature, sort of staying in line with the bird theme. So you have to stake the Moonbird, and the longer you have it staked on the website, the more future drops, exclusives, airdrops, mints you'll be allowed access to. So it's encouraging people to hold on to these things, because if you decide to sell it, or if someone decides to like buy it like a month from now, then they'll be a month behind everyone else in terms of like being eligible for future drops, because it's like the longer you hold it, the better it is. And I think that is probably what's causing so much FOMO for these birds right now. People want to get one in preparation for the nesting feature that's going to be released soon, so that they can get the bird nested and be eligible for anything that's going to be coming up, like mints and that. So they'll be able to qualify for them. But yeah, in terms of like any actual utility, nothing concrete has been revealed yet. It's just a lot of speculation at the moment, as far as I've seen.
Yeah, Navesh.
Yeah, I would like to add like a little bit for Moonbirds. I think it's airdrops like the main economic benefit, but they've also said that it's like they're trying to copy Bored Ape. You're gonna get exclusive Discord memberships, and you're gonna get research pieces every week. We're gonna have a market call, which is gonna be headed by the leaders from the first 1,000 proof collective owners. And so, yeah, I think part of the success is because they are like, it's becoming an exclusive club like Bored Ape. It wants to.
Right. Okay. Okay. So both of those takes are interesting. As Tim, as you were speaking, it was what Navesh eventually said was also occurring to me, that this looks a lot like not a copycat move, but at least sort of following the blueprint of trying to create this idea of an exclusive club that only certain people have access to. But to your point, Tim, like that does, like in the case of Moonbird specifically, this sounds like just pure speculation, in the sense that we are, we have a market that is a market for these NFTs that can be later nested in the hopes of receiving more branded NFTs or tokens or whatever it is that's essentially branded within this ecosystem. And that's not to, well, I don't know. Is that an unfair take? Does anybody want to push back against that? Brooks, what do you think about Moonbirds?
Jacob, I got nothing for you on this one.
No, not fair. Not a fair. You're right. Okay. Well, let's turn to the other resident skeptic in the room. Mitchell, we haven't heard from you yet this morning. Were you one of the guys that Christian alluded to in line for a whitelist spot?
No, I was not. So I'm also in the Cope Club.
So what do you think? Is this just a purely speculative thing, or is there something to this value of, or this promise of some future utility of value?
Well, you know me, the ongoing pessimist. I think that it's probably mostly a speculative thing. The reason why it's seen so much success is relative to all the other NFTs, which seem like they're purely speculative value. Even incremental improvements in being able to provide utility allows it to stand out, in addition to having backers and developers around it who have a lot of renown. And one of the big elements for the success of an NFT project seems to be the network effects around the people who are creating the collection. So whether that be the artists or like the other backers around it. And it seems like, I was thinking about this morning, it seems like NFTs are a very good way for someone to cash in on their network or create some value around it by building that community and tying some sort of monetary and speculative potential to that person's following. So I anticipate that we'll continue to see NFTs that see more success than Moonbirds. But I do think that for now, Moonbirds is an outlier because of the characteristics of the celebrity status of some of the developers, and as well as the addition of elements of utility that are a little bit novel in the NFT space.
So would you say that, and this might not be fair, but I often find myself thinking about, we're told that the value of an NFT community is primarily the community. But I find myself questioning, what do we mean by community? What does a community coalesce around? What value do I derive from participating in conversations with people who I share an NFT avatar with? And Mitchell, what you bring up here, this idea of celebrity developers or just other notable figures in the industry cashing in on their net worth, their network. Freud was right. That seems like, I don't want to be too cynical here, but is there anything to these communities beyond the sense of sort of proximity to celebrity? Like, is it just a matter of, like back when Elvis was alive, people just wanted to go to an Elvis concert to be in the presence of Elvis, right? And hopefully get a scarf. You could watch him on TV or in a recording, but that's not the same. Like, is that the draw of these communities, or is there something I'm missing here? Like, is there an actual community element that's enriching and culturally?
There is also that element of all the people who loved Elvis like to hang out with other Elvis lovers. I mean, like by the definition of the community, it's not just about the proximity to the celebrity. I mean, it even becomes a little bit less than the celebrity than finding other people who are like-minded that you can really vibe with, kind of like this Discord.
Okay.
Okay,
cool.
If you think about it, a lot of these communities are really just social clubs, and people spend a lot of money to be part of social clubs or spend a lot of time. Like, look at all the games that are community driven, like social games, or MMORPGs. People will invest like 20, 30 hours a week to participate in these communities. So does it really seem that outlandish that someone would spend $500 or $1,000 to become part of some sort of NFT community? Maybe not.
No, perhaps not. And I guess perhaps I was veering a little bit into my my more cynical mindset. I didn't mean to imply there was anything wrong with sort of coalescing around a celebrity figure, or even reveling in the communal sense of enjoying what that person has put forward, or like I guess music is a good example. Fan clubs coalesce around the idea that they like similar things. Is there anything else I'm missing? Ant, would you like to chime in at this point, or is it unfair for me to ask what you think about Moonbirds?
Deeply unfair.
Deeply unfair.
No, I think there's there's a community aspect, isn't there, where if you'll pardon the pun, birds of a feather flock together. So you do get those kind of like-minded individuals. You've got that. You've got that aspect of NFTs as well, haven't you? Where you've got some, like, if you look on crypto Twitter, there's some really, really big players in that space who treat them as a very significant alternative sort of investment vehicle. And it seems to me that in the minds of these players, like they collapse the idea of Ethereum into the idea of the NFT itself. They almost see no difference between an NFT and Ethereum, but they have this belief that over long periods of time, perhaps over a decade, these NFTs will become progressively more scarce, more valuable, whatever, and in the end they will be phenomenally good plays. Maybe, and then sometimes, like in my mind, I even think that perhaps NFTs are, as an idea, are a kind of like an interesting alternative, or maybe a hedge to playing the actual currency markets themselves. Like maybe the NFTs long term will outperform things, outperform the currencies. So yeah, I don't know. Like I think yeah, they have all sorts of utility, don't they? And also these moonbirds as well. They're kind of cute. Yeah, it's like that thing about animals, isn't it? Like small animals with big eyes, extra cute, and that's why we've got an internet full of cats and God knows what. But these are also pixelated, so in like a kind of like an artistic sense, they
and
tick
pudgy
a lot of good
penguins.
boxes. Yeah, exactly. Yeah, totally. So they're good. I like them. I wish I had one, but I don't. So that's me.
Sorry.
Hey, that's cool.
All right. Cool. Let's turn it a little bit at this point. Well, I don't want to talk about the markets just yet because we typically will save that to the end. Let's, I want to take just a brief interlude before we move on from NFTs to ask the room, has anybody, if they're willing to share, has anybody used Coinbase's NFT Marketplace yet? I'm going to take that as a resound.
I don't think anyone has beta access.
Do we know?
Right? Yeah, because they're only letting
I
a few people on.
I've not used it, but I've seen. I did see some posts on crypto Twitter where some of the bigger characters in the space were showing the amount of hate that they'd received for their Bored Apes and stuff like that.
In the comment section, you mean? Or because Coinbase has introduced comments to the NFT Marketplace, right?
I can't honestly say where it came from, but I definitely saw like posts that appeared to be screenshots of the Coinbase NFT market, where people were just basically sort of ripping each other for their whatever NFT they happen to own in a kind of an unpleasant manner.
Yeah, that sounds deeply unpleasant. It reminds me of the utility in MySpace, if anybody remembers MySpace, that allowed you to rank your friends. I think it was like your top 10 friends you were able to rank on your public profile. And it turned out people didn't like seeing that about themselves at all.
That literally devastated me in 7th grade.
That's fair. It's probably best that we moved on from that anyway. You know what? Let's go ahead and talk about the markets, because I think there's something interesting to talk about this week that we didn't quite do in our roundup, but it has to do with a story that Brooks did this week regarding the impetus for the story was Netflix's sudden collapse in stock price. I think by the time we wrote the story, it was down like 37%. It was bad. There was a couple of other tech stocks down too. Anyway, Netflix was the big loser that day. And what Brooks noticed is, and I'm going to turn it over to him to talk a little bit about this more, is that, we had this sort of, basically, it looked like a correction in these sort of pandemic era favorite tech stocks. But the crypto markets, while they have seemed pretty shaky over the last couple of days, have really been fairly resilient in the wake of the pandemic. Brooks, would you care to say more about what you discovered in the course of that piece?
Yeah, thanks, Jacob. Yeah, it's because I remember before I was really super trading, like most of my net worth in crypto, I was all in stocks in 2020. It was a fantastic time to be in sort of the degenerate names. You wanted to be in the stocks with absolutely no profits. Maybe hopefully not for 5 years. You wanted to be in biotech. You wanted to be in all the promises. Anyway, just the crazy stuff is what was mooning in 2020. But and those have all gotten absolutely wrecked in a way that crypto really hasn't, or at least the more blue chip names. I mean, obviously we can all name some of our altcoins that have gotten crushed, but it's not just that. It's the other names, the Zooms, the Pelotons, the Fastly, the DraftKings. these like pandemic favorites are down 70-80% off highs. I mean, even PayPal, like a fintech darling, like a $400 billion market cap, last I saw was like 120 billion or something. So I guess kind of my thinking was, and then like, crypto's like 10x since the March lows in terms of total market cap, and then Bitcoin and ETH are down like maybe a third or maybe 30 or 40% from their all-time highs in November. So it just begs the question. It's not difficult to lose money in the stock market. I mean, look at the SPAC mania, these special purpose acquisition companies. How many of those where these investors just absolutely line their pockets? Basically, I don't understand too much about how SPACs work, but it's a pretty risk-free way to make money when you list. For the backers, I think. I guess they kind of win either way. So yeah, why hasn't a Bitcoin? I guess kind of the question is, why hasn't a Bitcoin ETF been approved? When it's held up extremely well, performed way better than literally anything else, and it's actually held up pretty well. Is it really that unsafe when you can do all these crazy things elsewhere? I mean, we've all heard that argument, but yeah.
Yeah, so that was kind of what I thought was the interesting angle of that article, was that we do, even though the last couple of years we continue talking about cryptocurrency being a particularly risky investment. Basically, whoever you ask, whether someone who thinks it's great or not, everyone seems to acknowledge its risk. But there seemed to have been this devastating loss in tech stocks waiting to happen, while there was plenty of money to be made in 2020. But volatility exists in the stock markets too, I guess, even if it doesn't happen I was going to say if it doesn't happen on a daily basis the way it does in crypto, but we saw with Netflix that it can drop pretty precipitously in a day. We saw the same thing with Meta earlier this year. I'd like to turn to Nathan a little bit to kind of talk about some other concerns that we had in our editorial meet yesterday. We kind of started talking about the looming interest rate hikes that were expected from the Fed, which Jerome Powell all but confirmed yesterday in a panel discussion, that we're looking at a half percentage point hike soon. He also warned of this pulling back, this sort of monetary tightening is possibly going to be cause for a recession. We need to brace ourselves for that. Anyway, the conversation we had in the writing room had to do with whether or not the idea of a decoupling, whether or not tech stocks specifically, and crypto would eventually decouple from one another. During a recession, it's kind of plain to see tech stocks, or not unexpected to see tech stocks pull back quite a bit. But even as we've seen this sort of grand correction over the course of going back to normal in the wake of the pandemic, crypto has not succumbed to its pre-2020 levels. In fact, it's up quite a bit. So Nathan, I guess I'd like to ask your take on this. Are we already beginning to see a slight decoupling in some ways, or am I just misreading, the English major who misreads charts consistently and doesn't know what he's looking at? And if I am, is that decoupling on the horizon, or is this correlation still pretty tight?
Yeah, I think the correlation's going to stay pretty tight. If you look at the Russell, that's also quite tightly correlated with Bitcoin. If you put up both charts against each other, I guess the big question now is how much further have stocks got to fall? Is the Nasdaq going to take out the Ukraine war low when it first announced? If that was to break, then that would be pretty bad for Bitcoin over the coming days. But I think that's where all the action's going to be. If the market gets underneath the lows that were created during the Ukraine crisis, but by the lows I mean the stock lows in all the major indices, if they remain defended, then I think there's still a chance that Bitcoin and the market could recover. And I think you've also got to look at growth. All the growth figures that are going to be coming out for the US economy is the recession hitting. I think that'll be bad for stocks as well. If there is a case that growth is still okay and the Fed is hiking, which everybody knows. I think there's still a case for a rebound in the market, but overall, I think it's going to be a very tense weekend in the crypto market, and I think potentially, the I would say the direction of the next couple of months is going to be determined over the next few days.
Well, all right. Any follow-ups to those thoughts? All right.
I can add real quick, or no, I won't add that. Never mind. Go ahead, please.
Are you sure?
Yeah, I'm good. Thanks.
Okay. Okay. Well, let's on that ominous note, let's kind of turn it back to you. And those of you listening to the audience, if you have any comments or questions, feel free to just raise your hand. We'll get you up on the stage. But we kicked off this conversation with mentioning the new stablecoins, both from Near and Tron, that are going to be forthcoming. Well, one as early as May, and the other has launched on testnet as of yesterday. So let's talk a little bit about stablecoins. I find stablecoins to be pretty interesting in the sense that, a stablecoin, at least those pegged to fiat currency, are not truly stable in the sense that that a fiat currency suffers from a lack of buying power as inflation rates increase. So there's a little bit of question around what we mean by stable when we're talking about stablecoin. But the question I want to pose to the group is, well, I'll get straight to the question. How many stablecoins? Forgive the train in the background. How many stablecoins does the market have room for? Is there a need for all these stablecoins? Like we've got USDC, Tether, UST. What's differentiating them? Why is there room for so many of them? Do they need regulations? Like obviously, we've heard Janet Yellen talking about stablecoins specifically as a point of contention in terms of what aspect of the crypto market needs regulation. But I guess to bring it back to put the question to the group: why so many stablecoins? Do we need this many? And how do we expect this sort of competition to shake out? Is Navesh, I'd be curious to get your thought on stablecoins. I tend to suspect that there might, or I tend to worry that there might be a rotation of value. That one is seen as a reserve one day, and one crisis of confidence later, another stablecoin takes its place as a reserve. Is that a valid worry, or do I just not know what I mean?
We don't know about the future, but I think the liquidity has been improving for these stable coins. Their utility, not so much, but with so many decentralized exchanges and even the crypto market, centralized exchanges have improved liquidity. So now, I don't think that they are going to fall to zero, and we are going to see capital shift between these protocols in terms of stable coins. But stable coins will be an important part of every ecosystem. If we think about a multi-chain future, then we have to accommodate these stable coins, because you see, Ethereum DAI was one of the major catalysts for Ethereum's growth, because it allowed Ethereum holders to gain some liquidity out of their asset and not sell it. Okay, and it has evolved. Now we can have extra yield. Now we can have LPs to mint stable coins. So I don't think that I look.
Okay, cool. That's a pretty optimistic view of how it's all going to, of how it should all work. Are there any other thoughts on this particular point?
I'll give it a shot. Yeah.
Okay.
Well, I mean, the way I see it is you've got dollar-backed stablecoins like USDT and USDC, and they're going to be in their own separate class. And I imagine over the next few months we spoke about this a few weeks back, but we will get regulation from the US government, I believe, making sure that like Circle and Tether can provide actual dollars for the stable coins that people hold. So you can redeem them one-to-one, and there'll be some kind of regulatory guarantee there, in the same way that the money you keep in your bank account is to a certain extent insured. Like I know in the UK, the FCA will insure like $85,000, I think. So that if I'm holding that in an FCA insured bank, that money is I'm always going to get $85,000 even if something bad happens, kind of deal. Of course, on the other hand, you've got algorithmic stablecoins, your UST, your Bean, rest in peace, and these upcoming initiatives, USN and USDD from Tron. And yeah, those are the interesting ones because they're all going to be fighting for this spot. People who are more inclined to, people who like decentralization more are going to favor them, and yeah, they're going to be able to earn much higher yields on them through various methods. Some of them might just be subsidized, some of them not. I feel like at the moment they're the ones that are really going to be fighting for users. Like UST is obviously in the lead right now, but depending what the other ones manage to produce in terms of yield and how much liquidity they can drive, it could change. And I just had an interesting thought as well that like maybe in the future, like individually, UST, USN, USDD, they're all individually they're all out there using their own algorithmic methods to maintain a peg. And so they all carry some risk of depegging. And we've been over this quite a few times, but it wouldn't surprise me if a year down the line or so, you had people making a stable coin off stable coins. So it's something like backed like 1/3 UST, 1/3 USN, 1/3 USDD. Just as an example, it would mitigate the risk, and we see that kind of behavior happening in traditional financial markets with stuff like collateralized debt positions and stuff, where they're gonna take different rated mortgage bonds and sort of mix them together so they can produce an asset that has a higher rating. It wouldn't surprise me if that kind of thing started happening in the future once the ecosystem got built out a lot more. So early days for that, I guess.
Yeah, I think you're. Oh, go ahead, Brooks.
Oh, no, please respond to that, and maybe I'll go after you. Go and respond to that.
Okay, well, I was just going to say, I think Tim is right to point out this distinction between classes of stablecoins, like those that are actually backed by fiat and those that are backed by an algorithm. And I don't like when there is. I think he's right that when there is competition, it's going to be between the algorithmic stablecoins will fight amongst themselves. The pegged or the backed stablecoins will fight among themselves. As when it comes to tension between dollar-backed and algorithmic stablecoins, I think I kind of see the usefulness of both of them, and this idea of sort of using a mix to mitigate the risk is interesting. That was all I was going to comment on. Brooks, what were you going to say?
Oh, thank you. Yeah, I was just going to say, I think it's interesting because I think last week the chief technology officer of Tether spoke about what's going on with it. Basically, it kind of seems like the court system, and along with probably just good old-fashioned economic pressures and factors of wanting to survive. This shady sort of behavior. It seems like they're cleaning their act up, Tether. Partly because they've been fined, and partly probably just to compete. I think, like, for example, they're getting rid of they're unloading a lot of their commercial debt in favor of U.S. Treasuries. And though they don't, I mean, the interviewer asked him, well, why don't you guys, like, he kept talking about how transparent they are and they're going to become more transparent. It's a little unusual that they won't just share the names of the companies that they actually hold commercial debt in. They don't actually share the names. They share the credit rating. And I think most of their companies are A2 plus, which is considered low credit risk. It's not like the best one, but it's like pretty low credit risk. Anyway, it's a little weird that they won't disclose the company names, but they're moving. It seems like they're moving in the right direction. Yeah.
Weird, isn't it? All right. Cool. Let's kind of, well, we've got a few minutes left here. Let's talk about, I guess we might as well talk about the Beanstalk hack. This happened on the weekend, and I didn't see it as it was happening. Christian, I believe. Christian, did you cover this story? Is that right?
Yeah.
Okay. So how bad is this? Like, is Beanstalk... is it dead and gone? Did this ruin it? Is it wrecked?
I'm just going to pull up the price now and see how it's fared in the days since. Because
it's like gone up to 128% off its lows. Like, it was down to like 3 cents. Now it's back at like 12, 14. Seems promising.
That is interesting.
Are you talking about Bean?
Oh, yeah, I'm talking about Bean, right?
Because Bean is showing for me that it's 15 cents, right?
Yeah.
So up 158%.
Yeah, it's like bounced.
But it's meant to be a stable coin.
Yeah, I mean, if you put the 1 year chart up, it used to be holding its peg. But, like, the fact that it's not just, like, flatlining, I think, is interesting, right? Showing signs of life, like it's not completely dead. I don't know, what do other people think?
Yeah, fair.
That looks pretty dead. I'm looking at the chart now. If it were to continue rising after that, I would be pretty surprised. But I guess, well, I'm looking back in September. It lost its peg. It dropped to 25 cents. So maybe, I don't know. Is anybody feeling?
I'd like to hear what Ant has to say, since he wrote the radar on Beanstalk.
Yeah, that's a good point, Ant.
I think it's probably dead, isn't it? I mean, there's probably just some people taking some extreme risk, sort of going, wait a minute, this is... I think when we wrote the article, I think it was down to 0.5 or 0.05, so 5 cents at the time. So, yeah, I suppose if you're feeling really brave, when it's at a price like that, you can easily double your money, can't you, if you can get back out of the trade, if a few other people are willing to come in at a price higher than you. So I guess any recovery is probably down to people taking some really big risks. Unless there's been any news about investors coming in to save it. I know when we were looking at the white paper, it's like I've looked at a few stablecoin white papers in the past as well, and the mechanism for this is just like, oh my god, it's the most complicated thing I've seen in terms of white papers. I've looked at lots of other algorithmic stablecoins and how they use the other, the complementary asset to balance themselves out. But this just had so many factors to it, and the way that it was collateralized with debt. And I believe it's also based on the same mechanism of a coin that previously failed anyway. So, I wouldn't hold out too many hopes for this, to be honest.
When you say
they're currently doing a public fundraiser to try and basically raise the money they've lost. They put out like a long post yesterday on this, and it's because they don't have they don't have sufficient reserves at the moment, right? Like if something like OpenSea is is hacked, right? OpenSea has billions, okay, or hundreds of millions, so like they can sort of cover this stuff. And we've heard rumors in the past of OpenSea actually privately going to users that lost their blue chips and been like, hey, we'll pay you the floor price for what you lost, because they realise that they've kind of screwed up with some of their bugs. And then you have stuff like Jump Capital funding like 300 million when Wormhole suffered that massive bridge attack early this year. But Beanstalk doesn't really have that. So yeah, from what I'm reading here, it's like they're trying to raise the funds from the public basically to sort of get back on track. Bidding period between 2nd of May and the 9th of May, it looks like, and that looks like that's their plan.
Interesting. I've noticed in a lot of these hacks or exploits, whatever the nature of the vulnerability ends up being, that it seems like it does often depend on someone with deep pockets coming in to sort of, bail out the network, for lack of a better term. It begs questions about what are the kinds of insurance policies that, not necessarily, I don't want to say it should be put in place immediately, but should be thought about in terms of what we can do to sort of cushion these losses when they happen. And I know there are some protocols out there that are doing it, but that's a topic for another day, I suppose. Ant, I see you're still unmuted. Did you have any last comments to share?
I was just thinking about that when we had the Popsicle Finance hack, which was one of the pick of the months. Like an investor did step in to bail them out and enable things to be repaid, and presumably they saw the potential future value in the project. Presumably here, there's no investors that are thinking the world needs another stablecoin. Going back to our previous discussion about the stablecoins that are emerging at the moment, there's presumably enough coming through with better potential. That means that it looks like, Bean are having to go to their users to try and resurrect themselves.
Yeah, it's probably like the worst time for them to get 76 million stolen, to be honest. But I guess it's just a kind of the stories rewrite themselves in DeFi sometimes, and I guess it's one of those.
Yep. All right. Well, we are on the hour, everybody. I want to say thank you all for spending your Friday with us. It's been a delight as usual. Thank you all for participating in the conversation. Wishing you all a great weekend. Take care, everybody.